want to just walk a little bit through history, Mr. Reader. And so I'd like to talk about how we ended up with pension insurance in the first place. I know you talked a little bit about that to begin with, but prior to 74, there was basically no protection for private pensions in this country. So as a worker, when your employer went down, you were on your own. You were really out on the street. And when we saw that happen with the old automaker Studebaker, it halted U.S. operations at the end of 63, and it terminated its pension plan, and for 4,000 of their workers, including some who had worked there 40 years, they lost the bulk of their pensions. That event, I think, woke up the people of this country, and it stirred Congress to act because they looked around and thought, we have to have a better system to protect our workers, to make sure people are playing by the rules, and to make sure pension promises are kept. Mr. Reader, I'm sure you know the legislative initiative that's resulted from Studebaker collapse was ERISA, and then the agency that you chair. And you know who the chief proponent of that legislation was. It was Jacob Javits, a Republican senator, and signed into law by a Republican president, Gerald Ford. When Gerald Ford signed the bipartisan legislation, he said ERISA will provide assurances that retirement dollars will be there when they're needed. That was the promise. And that's what this is all about. Making sure retirement dollars are there when they're needed. And I mentioned that Republican history because we all need to realize this is a bipartisan issue. To be sure, we've heard a lot about reforms that need to happen, and I'm all ears. And I think we should take a hard look at how we can improve the retirement guarantee system. It's probably a long time coming, should have been addressed years ago, as we looked at changing demographics and as we looked at more and more erosion of defined benefit plans to a 401k system. But right now we have an emergency, and I think Senator Portman outlined the contagion effect, so no one should feel safe. This could result in dire consequences, and at the tip of the spear is our central states pension and the mine workers. So simply raising premiums isn't going to get the job done. I think we all need to recognize that there are no easy solutions. My colleagues and I have put forth the Butch-Lewis Act, which is a type of loan program that would help workers rehabilitate their pension plans so that they can keep their benefits. I know there's been a fair amount of criticism of that because as a result of what people see as overt involvement of the federal government in providing that level of assistance and that level of loan guarantee. But I want to look at the history of loan programs in the United States of America and with the American economy. AGI, we loaned them $67 billion. Bank of America, we loaned them $45 billion. Goldman Sachs, we loaned them $10 billion. JP Morgan Chase, $25 billion. These are just a few of the big financial companies. We also help the automakers. General Motors, we loaned them $50 billion. Chrysler, $10 billion. U.S. Airlines, up to $10 billion. Farm Credit, $4 billion in bonds. And I raise that history because I think that as we are looking at the amount of federal taxpayer exposure to help at times of economic crisis in this country, we've been willing to disperse a whole lot of money. In fact, by our calculation, when you add it all up, it's over $600 billion. And today, the taxpayers have come out ahead as a result of that. We've not only prevented catastrophic economic decline, but we've been able to right the ship and improve the economy. So when big corporations get in trouble, the answer's been clear. We help them out. As distasteful as that may be, and as politically challenged as that may be, we've stepped up, and the federal government's become the lender of last resort. So, Mr. Reader, would you agree that loan programs in the past have been used in times of economic crisis?
Yeah, I believe so.
And do you believe that challenges facing funds like Central States and other similarly situated plans could cause massive economic damage to workers, their families, small businesses, and by contagion, the entire economy. Would you agree?
Yes, I agree with that.
So clearly, when it's the banks or the insurance companies or the automakers, we provide loans to stabilize our economy. I'm open to anything that works, but I would ask colleagues to take a similarly open-minded position on helping during this time. And so if I can just close with a statement that, yes, we have to look at the macroeconomic challenges that we have. But behind you are a number of workers who don't know that there's any certainty and economic dignity for them and their families. Watching this hearing are another hundreds of thousands of American workers who wonder when is it their turn to get listened to. And so I just want to make sure that we don't dismiss out of hand plans that would in fact respond to this challenge the way we've responded to many, many dire economic challenges in the past, and that is to provide the security and support to make sure that these funds are fully funded and that our pensioners get the pensions they deserve. Thank you, Mr. Chairman.